It is Monday, October 30th, 2017. Hopefully everybody can hear me. I'm just checking some of my settings. Does everyone or does anyone hear a big echo of my voice? Okay. Good, good. All right. Okay. I'm getting an echo. All right, I will try to speak a little bit more softly. Okay. I just hit mute on my headset and we're live. Okay, so here we go. Perfect. Just adjust the microphone. All right, so again, it is Monday, October 30th, 2017, and this is Rob from StockTraders.net. I am recording, so that's good. I missed my last one. Okay, guys, tonight we're going to be reviewing basic stock research, okay? And I want to stress the word basic. There is a lot to stock research, a lot more than we can cover in 30 or 45 minutes tonight. I am working on putting together an in-depth presentation for those of you that are interested in research, in researching various different types of stocks. So I'd just like to go through our first couple of slides. Then I'm going to go through some quick examples for us. All right, so during market hours, when we need to find out some information quickly, I call that due diligence, right? We're trying to learn something about a company that we may or may not have any information on from our past experiences trading. All right, so again, I call this due diligence, and that refers to something we call the research template. And it's a constant struggle for us versus the speed of the research, the information we're gathering, but most importantly is the accuracy, right? So we want to get as much accurate information as possible, but we want to get that information as quickly as possible. That's one type of our basic stock research, right? I call it due diligence. And then we have exactly the opposite. We have our nightly research reviews, which I've termed tear sheet. And believe me, this is completely subject to change. I have a couple of examples that we're going to go over. But this is where, you're working at your own pace. You're really reading through the filings. I can tell you it takes several hours to really get a true understanding of companies, of their filings, of their registration statements, including any possible effects or any PRs, which would then make the company's selling shares effective. All right, we're going to go through that. I'm going to address some questions that I did receive via email today. That was great, encouraging. And then any additional questions that you guys have, feel free to type it right in our premium room, and I'll try to answer them as best as possible. Okay. So I'm going to be coming back to this area here as we go along. So again, due diligence during market hours. I mentioned that it's speed versus accuracy. I'm just keeping along with myself. So I want to go and show you a couple of things that I look at almost first. All right, and again, I'm using INFI as an example. Clearly, we haven't even looked at INFI in several weeks, but it was a runner back in, I think it was October 13th, I'm not sure, where we did have time to do both due diligence during the day as well as complete a tear sheet that night after successful in-depth research on that stock. All right, so first place I look is FinViz. And what do I look at? Well, I look at the market cap. And as you know, guys, this is all going to be available for you just by hitting pause when after this is up and available to the premium members. All right. So I'm just going through what I've outlined in the webinar, but I'm doing it in an example format. So the very first thing I look at is a market cap. I just want to get an idea. Are we talking about, $20 million company or $20 billion company? Clearly, you're going to trade those differently than you would trade them the same. Okay. So that's market cap. I always look at the shares in the float. I think that's very important. And I also take a look at the institutional ownership, and I'll tell you why. Because here you're looking at basically a 70% institutional ownership on almost 50 million shares. So that's 35 million shares. And institutions, they don't usually day trade positions. So that's really leaving me with an available float, or a very liquid float, of about 15 million shares. I would trade that information very differently than I would trade a company with 50 million shares. That's why institutional ownership means a lot to me. Also, very important is the short float, right? This says 1.5%. I have noticed that FinViz is somewhat dated at times, and I do try to go through the filings and get the most accurate information, but in a due diligence situation, it's a pretty good source of information. I have also used Google Finance, Yahoo Finance, and many other areas or websites that are available to get this information. But I like the way it's presented in FinViz. You might like Google Finance a little bit better. All right. So that's FinViz, and those, again, I'm sure many of you are familiar with it. It gives a good snapshot here of information, talks about the ratings that are, and more importantly, the companies that are following the stock. And then it gives an overview of all the news related stories that are available. And right down the bottom, it usually gives you just a quick 1 or 2 sentence description of the company and where it's located. All right, so I always take that into consideration as well. But again, we're up against speed versus accuracy. So I want to get the information, record it in our template, which I'll be sharing with you as well, and move on. All right, so the very next, let me go back here. So we covered FinViz, right? Then I want to look at the filings. All right, and there's several different ways to view this information. All right, one is sec.gov. Right, this is all free for anyone to use it, and again, you'll get all the links here that I've discussed here: sec.gov, BAMSEC, which we'll be reviewing, and FinViz. All right, so sec.gov basically brings you into their homepage. I always use the fast search, and again, for tonight's example information, we're using INFI. Now you'll notice the format of the information is in chronological order. All right, it doesn't really break out the filing types, and it just goes on and on and on. There's probably hundreds and hundreds of filings. All right, so this information is available, but I also use BAMSEC. BAMSEC is free for the most part. And you'll notice I typed in INFI for our example, but it's presented a different way, and in a way that I'm getting more and more used to as time goes on. So I know exactly where to look, what section of BAMSEC I want to look at for the information that I'm interested in. All right. So here's all the financials. And again, they're listed chronologically. Here you have your 10Q for the second quarter that ended June 30th. That 10Q was published on August 3rd, okay? And so on and so forth. Here's your annual and whatnot. And guys, these form acronyms, you'll get used to them because they're very repetitive in nature. If you're so inclined, you can create a little legend. I know a 10Q is a quarterly, a 10K is an annual. Here we're looking again on BAMSEC. Look at the other information. Notice there's an effect here from 4/28/16. All right, so then I see an effect. I know there must have been a shelf registration associated with it, but I want to show you a little quick and easy. Well, I should stick with my webinar. overview. So let me do that first. All right, so on the consolidated balance sheet from the latest 10Q or 10K, and I can tell you it's going to be the 10Q that we're looking at, I simply hit 10Q. It opens up the quarterly report for INFI. All right, and you'll notice I have a list of items that I'm looking at. Again, you can pause the webinar later on once it's posted, but I am going to go through these items. It's incredibly easy, right? You use the simple Control F function. All right, it brings up this box here, and I'm going to be typing in for my first search cash and cash equivalents, right? So it brings me right to the condensed consolidated balance sheet, and I know that this data is accurate as of June 30th, 2017. All right, it's listed there, but it's also the quarterly report. So I take a look quickly at the cash and cash equivalents. It's 66,197, but you'll notice this is in thousands, right? So I know, and that's very common across many different companies. This is a domestic company, right? It's based in Cambridge, Massachusetts. You know, when you're looking at Chinese companies, even Canadian companies or Israeli companies, as I happen to look today, sometimes they are based in the local currency, but more often than not, they'll actually do the conversion back to US dollars for us. If not, you're going to have to do it yourself. So June 30th, 2017, you know, we have here that INFI has approximately $66.2 million. All right, does that tell us anything? Yeah, they get a little bit of cash, right? What else can we see from that information? Well, I can tell you that their cash balance went down over the 6 months ended June 30th from the end of 2016. All right, went down about $8 million. Is it substantial? Don't know. Is it important? Not sure yet. All right, I also take a look at the total current assets. All right, so 68 million, roughly 69 million. And I will round, by the way, I will round up. It's not an exact science. I want to get a quick and dirty understanding of their financials. So I look at both current and total assets, and then I'm looking at liabilities. All right, here's our current liabilities of just about $11 million. So what does that tell us? Well, they certainly have the cash to pay off their liabilities. Their liabilities went down from the end of 2016 to the end of June 2017. All right. And I also look at stockholders' equity. And the reason this is important, there are many different requirements that stocks have to maintain in order to maintain their listing on their given exchange. All right. We can go into that later in the in-depth research overview, but believe me, there's many different things that companies have to maintain to remain listed on their current exchange. One of them happens to be, in most cases, a $2.5 million shareholder equity. Here, INFI has almost 59 million. Okay. Let's see, current liabilities, total stockholders equity. Right, understanding the requirements based on the exchange, such as the stockholders equity. You'll see that I use this acronym quickly here, MVPHS. Oh, excuse me. MVPHS, that's the market value of publicly held securities. And most of you are familiar with, minimum bid requirements of at least $1 over the preceding 10 days. All right. So let's go back to the balance sheet. And now we're looking at the consolidated statement of cash flows. And here we are. Right? You'll notice that the layout of 10Qs and 10Ks are very similar across companies. Let me just check if I'm getting any questions. Guys, if you have any questions, let me know. Okay. And let's see where I was. Okay, consolidated statement of cash flows. Again, I'm looking at the latest 10K and 10Q. And in this instance, all I had to do was come down a page and a half. What's important to me here? Right here. Net cash used in operating activities. I know for 6 months ended June 30th, 2017, they used approximately $27 million in cash, right? Significantly less than the 98 million they used for 6 months ended December 2016, right? But what does that mean to me? I can figure out that if it's 27 million in cash, they're burning about 4.5 million a month. How do I know that? Because they use 27 million over 6 months. It's simple math. 27 divided by 6 is about 4.5 million. Okay? So now I know they're burning 4.5 million a month. Why is that important? Because I know that their cash is 66 million. So they have a lot of time left with their current cash availability, right? Over almost 15 months worth of cash. Okay. Let's go back. All right. So again, quick and dirty. I know they're burning 4.5 million a month. All right. And then, but it's only important as to how much cash they have left. Are they out of cash? Do they need money right away? Do they have a year, 2 years of cash? Then it's not that important. Okay. What is considered low in cash? That's going to be dependent on the company, Joe. But yeah, less than a year, sure, that's low in cash. I can tell you a lot of the biotech runners have months or weeks of cash, not a year. So it's relative to the industry that you're researching, and more specifically, it's relative to the stock. Okay, and you'll notice that we also talk about quick ratio. Just go back to my webinar. Right. So quick ratio, it's a simple mathematical calculation once you have the information. It's current assets divided by current liabilities. And this gives you a very quick understanding of whether or not a company can pay all of its outstanding liabilities with the current assets on hand. So normally a result under 1 is considered negative, where a result over 1 or significantly over 1 would be somewhat of a positive for the corporation. Okay? All right, let's get into our registration statements, effects, and PR. Again, all of this information is going to be located on the SEC.gov and on the free version of BAMSEC. Going back, so I have all of the information from the consolidated financials, and as well as the consolidated statement of cash flows. Now the next step that I'm interested in obtaining, and again, this is due diligence during market hours, the stock's going crazy, I want an understanding of what type of position this company's in. I noticed right away that this company has an effect, all right? And I can tell you that it's related to this information here, prospectuses and registrations. But I want to show you that little shortcut. If you guys click on effect, and again, this is all free on BAMSEC, click on effect, it's going to bring you to a page which is hosted by BAMSEC, but it's actually within the SEC.gov. Guys, pay attention to this file number. If you click on the file number, it's then going to bring you back to Edgar, which is the area within SEC.gov, and it's going to list out the corresponding filings that have to do with that file number, right? This is very important. Look at the file number 333-209-661 for this one, and this one. What does it mean? This is very easy. I can tell you that the company registered this statement on February 23rd, 2016. I can tell you that approximately 2 months later, on April 28th, the SEC then effected that registration statement. And then, about a week and a half later, the company then PR'd a portion or all of that registration statement. Now let's get into the specifics of our example in INFI. All right, I want to see, and again, there's a lot of information here, but I only need to see the existing S3 form. All right, so what is this telling me? Well, it's telling me that they're gonna sell $100 million, right? Maximum aggregate offering price. So regardless of what the stock price is, they're going to sell $100 million worth of, and it could be debt, common stock, preferred stock, or warrants. So you'll see that this red lettering here, and very commonly in the industry, this is called a red herring. Why? Because it doesn't have all the information. They're saying we're going to sell $100 million. We're not sure of how we're going to sell it based on market conditions, but we want to register this with the SEC. Then the SEC affects it, right? So you'll notice when we hit the effect, it brings us back to the same exact information, right? The file number. Perfect. Now I want to see what the PR is. All right. So this PR, very commonly, it's a 424B5. And again, as you do more and more research on your own, or as we do it together within stocktraders.net, you'll become very familiar with these form numbers. All right. Looking at the 424B5, I know that there's up to $50 million common stock offering that's taken place. How do I know it? Because it tells me right there, right? They're going to sell $50 million of common stock. And very important, if you see right here, it's at the market. What does that mean? They're going to sell it in the open market. Who's going to do it? Cantor Fitzgerald. All right? All the information you need to know is available to you free of charge. It's just a question of whether or not you can get that information quickly. And as you go through, many different research items, you'll become familiar with the underwriters of certain registrations and PRs, right? Cantor Fitzgerald, pretty reputable firm. Okay, they're really not a chop shop, if you will. There's some other firms out there that as soon as I see them, I know it's a good short. They probably pumped the stock to get it to a higher price to sell shares to the public. I'm not going to pick on H.C. Wainwright, but I will tell you that they underwrite many of the high-flying biotechs. All right. So when I see H.C. Wainwright, the hair on the back of my neck stands up a little bit. All right. Let's go back and see where we are here. Common stock, right? They can sell common stock, warrants, debts, and it usually lists what they can do. I always pay attention to whether or not it's at the money. If there is any pricing detail, usually there is not. Unless it's a private placement, which is possible. And as I mentioned, I always look at the underwriters. All right. So the quantity of information to review during the trading day is an issue. We've talked about that. Something we haven't really talked about are the domestic versus foreign companies. It's a little bit more difficult to understand all of the information of a foreign company. A lot of the filings, which are exactly the same, may be called something different. So I know there's a 20F, which is a current report for any foreign company. But again, you'll get used to it as time goes by and you do more and more research on your own. Thank you, Monaco, for that information. All right, let's see. So the filing rules vary by company. Yeah, that's another thing, right? So when you're a US-based company, there's very strict rules and regulations set up by the SEC for filings and for disclosure of material events, any type of news that may hit a stock that may impact its price, any type of insider holding. Let's talk about that quickly. Go back. This is the home page. I'm just typing in the symbol. You'll notice part here is the ownership. So you can go look up, what, I'm trying to get an easy name. Lawrence. What does Lawrence own of INFI? When he bought it? What he paid? Why he bought it? So there's just a lot of information available to us, and we have to discern what is important. Okay? Filing rules vary by country, right? So I also search for reverse stock splits. And again, that's going to be held in your latest quarterly or annual filing. And I just do a Control F on reverse. All right. This has no hits on the word reverse in the quarterly filing. So I can tell you at least in the last 3 months, there has been no mention of reverse stock splits. You can also go back and check the annual filing. Right here. Right? Again, just quickly. So there is the word reverse. I could be even more specific and say split, and there is no reference to reverse split. All right. Let me follow along. We talked about quick ratio. That's the one before, sorry. Reverse split. Guys, there's a lot of keywords that I search through the quarterly filings. All right, I'm not going to do it, but I do have them listed here. I look for reverse split. If there is a reverse split present, I want to understand the ratio and the date that the reverse happened. I also look for going concern. So as we all know, U.S. companies are audited normally by a member of the Big Four, but that's irrelevant for this review. But I do look for a going concern. There's certain GAAP rules that all companies in the U.S. have to adhere to, and if there's any concern by the auditing members, that going concern will be right in the filings. They're not hiding any information. It's right there for us to go and look at. All right. Let's see the importance of a reverse split. It's pretty important because it really shows that the company is normally very weak. Why did they do a reverse split? Normally to obtain the minimum bid price of at least $1 or to increase or decrease their shares. So it is a weak sign of a company. Also, if the company has received a delisting notice from the SEC, I look at that every time I research a company. Again, I don't want to go through all of these. It'll go on for hours. But let's look. I review revenues and cost of goods sold between the time periods. I want to see, hey, did they make more money? And did they make it using less cost of goods sold? You know, some things you can glean right away from the information. And I just show you real quick where this is located. I know it's in. I know I'm jumping around, but I want to make sure you guys understand it's very easy to obtain this information. All right, it's all right here. So I look at the data between the two data points that's within the quarterly filing. This happens to be a quarterly filing. And then I look at what's SG&A. I think that's selling, gross and administrative expenses versus R&D. And you know, when a company is spending more on SG&A versus their R&D, and this may be a little bit specific to healthcare or biotech companies, it's not a positive sign, right? They're spending more in marketing than they are in R&Ding their possible drug, whatever that may be. All right. There is additional documentation available for review here. So again, you can pause the webinar at a later point and insert that link. It's all public and it's here. All right. Frequently asked questions about shelf offerings. This is a very long document. It's very detailed, but if you're so inclined, have at it. Additional questions from premium members. Yeah, I'll get to that in 1 minute. I do want to bring up the sheets that we talked about. Let me go here. All right. So again, this is our research template example. I'm going to bring up a little bit bigger example for us. I'm going to get to those questions in just a second. I do want to stay on that for 1 second. I'll try to bring it up for us. Here's the research template. All right, I'm going to bring it up into this one. So here it is. This is really what we use to understand that, or to go in order of due diligence during the day. And you'll notice as we go down, and again, it's just a quick Excel sheet, but it's the data that I'm interested in finding out as quickly as I can with a focus on accuracy. Right? It's everything we talked about. Market cap, float, short ratio, institutional ownership. Do they have an effect? Yes, no. If they do, what's the amount? I might add the underwriter here. I think that's pretty important. Okay, balance sheet items. We talked about cash equivalents. I don't want to go through them all because we did talk about them already, right? I'm gathering this information. I'm saving it in Excel spreadsheet so I can come back to it again and again as I need. All right. You'll notice all the information we talked about. Statement of operations section, you have the revenue, cost of goods sold, everything we talked about. Delisting, did they do a reverse, shares outstanding. But one thing I haven't mentioned, and I probably should, clearly a lot of the stocks that we're looking at have very recent news items. All right, so we use various news sources, including Trade the News as well as others, Benzinga, and I always cut and paste the news so I know on that day, the day that I'm looking, what that news item was. It's very important. Okay. All right, and let's see. Now, I've termed this term tier sheet, and I want to let you know it's probably going to change, but from my history back as a broker, this is what we used to call them. They're one page, they're full of information, and usually it's very good information. Let me bring it up in a little bit bigger form for us to look at. And guys, this is information, again, as an example that I'm using for tonight's webinar that we put together at StockTraders.net. So this is the data that we're gathering after hours when we have plenty of time, right? But obviously all of the information that I've captured during the day also feeds into this sheet. I'm sorry about that, guys. Okay. So we talked about, I always have the news, the report date, the stock symbol, the stock name, and I call this area quick sheet. You'll notice very repetitive information between our research template and our tier sheet. However, here we have cut and paste the news, right? We understand that in balance sheet, this is the data that we're interested in, right? This is the last data point. There's 6 months difference. Then we look at the, obviously I put in here what the quick ratio was, right? TCA, total current assets, TCL, total current liabilities. Simple math. Statement of cash flows. Again, net cash used. This is how I'm figuring out my burn rate. And I look at, okay, what do I have left? So I have 14 and a half months. And you know what else I should put there? When is that? If they have 14 and a half months left on 6/30, I want to know when they're out of cash. Here it is. September 15th, roughly, 2018. So it's really not that close, okay? And then I work with Titus, and we make sure that his trading opinion is documented here. We enter a quick chart, and obviously we have our disclaimers down the bottom. But again, this is our after hours tier sheet that we put together for trading candidates either that day or in the very near future, normally with short-term price targets. Okay. I think that's going to do it for the webinar. Now let me go and take some questions. I'm just reading over the Monaco's information here. Proxy. Yep. Again, I'm giving an overview of how we do things, but this is basic research fundamentals. There are many more pieces of information that you really need to look at, and we are working on a webinar that will be in-depth research for those of you that are interested. Are the sheets available for users? Are those examples of how to do it? I think they're going to be available for premium users, guys. It's just an Excel template. There's no magic there. The information that I listed, I put it in an Excel sheet and I save them. And believe it or not, over the last 6 months, I would venture to say I have at least 300 research templates on companies and dozens of tear sheets prepared. So there you go. Monaco, it's going to be available for premium members. All right, let me just go back. Guys, anybody here that has a question, ask away. We're at 5:35. That's pretty good, 35 minutes. Did I go through anything too fast? This is being recorded. That's gonna be available. Impernetic, that's gonna be available to the premium members in the premium member link, which is on the left side under services, right? I'm gonna post that up. I'm gonna post that up tonight. So hopefully that'll be up there in just a few short minutes. Pretty sure I covered everything I wanted to tonight. I'm always available for premium member questions and answers. robresearchstn@gmail.com. I look at that throughout the day. Oh, you know what? We did get some questions. Let's see if I can just do this quick. I did get some questions I want to address that were received from email. We are planning to have that sheet available every morning starting next week, so those will be available. So here are some questions for the webinar tonight. What's the quickest way to see if a registration statement has an effect? Well, we certainly went over that, right? I believe the quickest way is going to be BAMSEC. I just like the way it's outlined and how they aggregate the information. There it is, and it's free. Any tips on how to find any untapped outstanding shelf within the filings? I think what he's asking is, of that effect, what is possibly left on the remaining shelf. So let me just go through a very quick answer here. So I first look at the S3, right? This is the aggregate shelf of $100 million in our example, right? So I know eventually they're going to be coming to market with $100 million bucks. But I also know from the effect that there's one PR related to this file number, and that PR is for $50 million. So they came at the market with 50 million, meaning they have 50 million left. I'm pretty sure that was his question. All right. Do you know any resources out there that document the history of stock split activity? Well, I found this site, and again, it was just a quick Google. Stocksplithistory.com looks free to me. I typed in GE. They may not have a lot of the smaller cap stocks, but if you're interested in a history of stock splits, this one seems pretty good. All right. What websites do I use with the research process? I certainly reviewed those tonight. So his last question is, more than once he saw a company announce an offering without a price. Right, because in that registration statement, at that time that they document it or publicize it, they have no idea of how they're going to get that money, right? So let's just go quickly back to BAMSEC for INFI. And we're going to look at the S3 that's related to it. They want to generate $100 million, and their thinking is it's going to be via debt, bonds, common stock, preferred stock, or warrants. So by either one or an assortment of these instruments, they will generate that $100 million over time. And that's why there's no pricing associated with it, right? Because they don't know which instrument they'll be using. But we know that they used common stock for half, or $50 million of that 100. That was granted effect by the SEC. Let's see, what financial ratios or metrics do you find most helpful in your analysis? I covered those for sure. That's going to be pretty easy, right? It's all of these. I look, and especially, does the company have enough cash, and when will they run out? All right. Those are the questions I received to date. And before I wrap it up, I would like to see if anyone in the room has any questions. Give it a minute or two. I hope it was helpful. As I said, I'm always here to answer your questions during the market day and after. Great, thank you, Luang. Okay. I will pause.